Well, we made it. We went skiing this weekend up at Bretton Woods, and it was a really nice time. I miss skiing. I used to do it all the time. I used to go twice a weekend in college, and this time I had to beat John Nigerian's 59.6 miles per hour. So the first day I didn't get there, but I got over 60 the second day. So SPCE. Amazing. For those of you guys that have watched the last two Sunday scans, you know where my head was at on that one. I had been swinging it, and my target was 25 to 30s. And it hit 29.89 after hours. So it did not quite hit the 30 goal, but close enough. I sold out the rest of it. I was slowly piecing out over Thursday and Friday. From the swing trade from 18 from Sunday scans, and I made it to about 27.60s, I think, best on the last bits of it. But overall, fantastic trade. They did do an S1A. I think it was for the warrants or whatnot. I haven't really investigated it yet, just because I got out of town on Friday. But based on the reaction, it flushed out right away. It came right back. So, ideally we get, 30, 32, 35, some type of parabolic action, and then, an unwind. The point, or the main thing that I wanted to go over tonight was, this trade is setting up. It's an A-plus type setup. There's going to be a great opportunity. There's going to be a big, big, big trade. However, you need to think about RAD, R-A-D. You can look back at that chart and you can see how high it went, continued to go and go and go, and it really squeezed out. Friday was the first day that SPCE started to really squeeze out, started to speed up relative to the prior price action. And that's what we kind of consider parabolic. So the goal in any parabolic situation is some type of gap up and parabolic type day to really exhaust and screw all the early shorts. And at which point I then like to potentially join. But a lot of time, and a lot of times I spend trying to find the top. There's a lot of times that I end up pre-exhausting myself. So RAD was a great example where, the days leading up to when it finally unwound, not that it was losers. Some of it was, some of it was turning a nice winner into a loser, but it was trying to find that top and just being right, nice unwind, but it held on, and I overstay. And then trying to find it again, being right, fading off, and then it comes back and overstay. So the key here is that there's going to be plenty of downside on SPCE when profit taking comes in, when the squeeze stops, but don't underestimate what can happen. And really the key is that, or at least what I'm trying to get across here, is that there's a lot of move after that one push. I mean, the one pullback. So, it's going up, going up, going up, slams down. There's a whole bunch of trades after that first pullback. And while that might be a fast $1 or $2, if you pre-exhaust yourself on the way up trying to find that top, which I saw a lot of tweets of different types of people, how does it keep going up? I'm getting short. This is too much. This is going too high. It's got to pull back. All of that is going to unwind to the upside. It's going to squeeze everybody out. And then when it pulls back, it's going to come right back to kind of where the squeeze started, and then it unwinds that entire move. That's what I want to take advantage of. So, again, be patient. The biggest move many times is after that initial breakdown, that initial pullback. And, unfortunately, a lot of times we try to anticipate that pullback, and we end up exhausting ourselves, and we miss that entire move. So that is the goal with this SPCE trade. Hopefully it continues to go. Hopefully it continues to squeeze out. But just don't try to be a hero and overstay and get in the way. There's going to be plenty of opportunities there. There was a couple other big picture ideas that worked very, very well. Lower volume type names that I don't really talk about, in the room. It's more of just a scan idea. If you see a trade, you take it. NRBO was one this week. There was, a nice steady buying each and every day. Very thin name. I thought I was doing pretty well when it went from 9 to 15. I was like, well, hey, if these crazy folks want to play 15, I'm happy to sell it to them, and then goes to $30. So I kind of identified CUO this week. It appears as if there's like a little buyer sneaking in there. Very, very similar, very small float share structure type of name. So I'm kind of watching that to see if they start to, buy the wicks. And I'm always looking for those types of charts. MICT is another one that I go over later. But basically, bigger picture idea trends are working right now, and they can either be the lower volume, lower float type names like I just mentioned, or they can be the bigger picture, which I really, really prefer, which was like SPCE that we went over, as well as Work. Work was another example of a trade this week. So we had the big 60 million volume day, which was 3, 4, 5. I guess it was Monday. And, huge volume, and then they put out they halted actually into the close or after hours, I forget what it was, and they say, hey, just by the way, IBM's been our customer for a long time, this isn't new, just in case there's any confusion. And despite pulling back immediately, I still liked it for a potential breakout, and the reason for that was the volume, was the 60 million. It hasn't really rebounded since IPO. And with that said, I was looking for the wicks to get bought up this week. And, you could see that if you pull up the daily chart, you can see that basically Monday it kind of faded off, got bought back up. Tuesday, faded off, got bought back up. And same thing on Thursday and Friday. And that's exactly what I'm looking for, no matter if it's a high volume type trade or a low volume type trade. That's exactly what we talked about on SPCE. And if none of this makes sense to you, just go back to the prior, Sunday scans. And I talk about, I think it's probably been the last 3 or so, especially talking about SPCE and why I was interested. I even took SPCE example and went back to the 10 and 11 range, and how you could see them kind of coming in and soaking it up. So that is the thesis on these styles of charts, purely technical, and then it's up to you. You do a little bit of basic fundamental research, make sure you know what you're up against. But if it checks out for you, I mean, there's been some really, really nice ideas. So hopefully you guys are capitalizing on them. I know that SPCE was a big one for a lot of people. I got a lot of feedback for that. So congratulations for those of you guys that did end up nailing that one. So let's jump right into it. Like I said, I just got back from skiing. We do have some A+ type setups, but one thing that I noticed last week was don't try to force anything off the open. There's a lot of stuff that's happening, but there's nothing that I've been like, all right, this is the one. And that was probably Wednesday, Thursday, Friday. Every morning I do a broadcast. I get on the microphone and I say, hey, these are the 10 to 12 that I was watching last night, but these are the 3 to 4 that I'm watching this morning. Maybe 2 from scan, 2 from whatever pre-market action's going on. And then I fine tune it even more, and these are my 1, 2 main watches. And that was hard Wednesday, Thursday, Friday. It was hard to say, hey, this is exactly what I'm watching. These are my A+ type setups. This is exactly what I'm planning to do. And you have to be able to recognize that. The days that you got to pull off a little bit or the days that you press. And, the days that you press are the days that, I think INO was an example maybe 2 weeks ago with all the coronavirus where the headlines were starting to dip a little bit, but we had this huge gap up, continuation, and then the gap up day, and all I wanted was that morning shove, meet it, with a lot of volume, and that's an A+ setup for me. And so it happened, and I reacted, and it was great. But you're not always going to have that. And, you can come in with a game plan, and things start to kind of change. jmpx, I was pretty excited about on Friday, but I also started the entire conversation with, everybody's on the wrong side. Expect the unexpected. And, in my mind, I was thinking 320s is probably, a good level to watch, squeeze out the early people and kind of see what happens. But instead, it tests 320, it starts to base. And so in my mind, I'm thinking 350, 380s. So this was a pretty big outlier style move. I provided, what I thought were the key areas. They worked out really, really well for those trading it. But again, you got to expect the unexpected on some of these types of trades. And anytime you're trying to fight or scale into these, and they end up going $1.58 more than you anticipated or higher, that's where you really do some damage to your account. So always keep that in mind. And always point here is if there is not an A+ setup, put on the brakes, and if there is an A+ setup and it's stronger than you think, and you've sized in, make sure that you size back out. Make sure that you get out and make sure that you respect your risk, because at the end of the day, it's always about your plan. And just because it's a winner or loser, whatever it may be, if it's a loss but you respected your plan, that's a win. The problem comes when you start thinking about what it should do, what you expected it to do, and it's not, and you overstay and you make bad decisions. So jmpx offered some amazing opportunities on Friday. I unfortunately, I was very nicely set sub fours, when it washed out. But I was kind of trying to be patient with a decent position, and it ended up, kind of grinding back up over fours and 420s. I was really, really hopeful for the 350, 320 washout later in the day, but, it just didn't get there. So for me, I minimized the trade. But I think that the key levels in the room really, really helped, a lot of people out. So I think those were the main thoughts that I had prior to scan for tomorrow. So let's go ahead and jump into it. jmpx, obviously we got a short week this week as well, so keep that in mind. We only got 4 days. President's Day today, so scan obviously is Monday night instead of Sunday night. But it's going to be a little bit of shortened week, and things are going to happen potentially a little bit faster. jmpx, higher the better. My suspicion is we gap down, but I am very hopeful that we don't. It did a great job of keeping shorts in there. They probably blew out shorts like crazy off the open, and then they kind of sized back in and probably were hoping for a big unwind, and it just didn't come. So that a lot of them probably covered towards the close. And, you can see that VWAP was kind of a resistance point. You can see after the initial move, all lower highs from basically noon, 12:30 on. And so I look at those things. So in a perfect world, come Tuesday morning, I'm going to be looking for 440s. That would be great opportunity. 440 to 470 is my window of reactive trade. So the reason that I come up with those levels is I'm looking left on the chart. I look at where the prior resistance was, the next resistance point, and I just hope that it goes into those levels, because I know that if it does, there's going to be a lot of emotional shorts covering. But at the end of the day, somebody that's not in there, that's not biased, that doesn't have a position, that's not bent, I'm able to see clearly that, hey, we're running into some big resistance here. So higher the better is goal, but I just kind of feel like we're going to open at 380. So I'm hopeful. And if we do open at 380s, that's fine. Higher the better. I'd love to fade it. This is another one, they're probably going to raise at some point soon here again. Just like CODX, we talked about, raise is imminent. And, whether or not they sell off in this market, it's a different market right now. But CODX did. They raised low threes that next morning when we were talking about it. So again, this jmpx, maybe they do tomorrow, maybe they do the next day, but that is not a reason or a good thesis to stay aggressive and stay short, especially when shorts are bent. So the key levels, like I said, 440 to 470s on a parabolic reactive trade. Otherwise, I'm thinking that 380s is where we're probably going to open. higher the better, and probably used 4s as my guide and potentially faded off from there. And again, anticipating a raise, yeah, maybe, but that's not the thesis behind the short, because that can get you in trouble. That causes you to do things that you wouldn't otherwise do. You start to ignore price action. You start to ignore things that you know better, because you start thinking, well, they got to raise, they got to raise, they got to raise, I'll be okay. And it's not always the case. Higher it goes, the better, the higher it goes, the less it might go back to that level, depending if they, fire down a really bad raise with crazy warrants and stuff like we obviously see with some of these names. But like these CODX types and I think the last couple times jmpx raised, it actually held its ground. So I wouldn't be making my trade thesis around that, expecting that that's going to fix everything. SPCE, like I said at the beginning of this, you can see, so they did an amendment of the S1, and it was right over here, and then it slammed down, but it pretty much held trend from there. So ideally we get some type of pullback, and as long as it holds over 27.50, I mean, shorts are still totally bent. I mean, they are anyway, but even at probably 26.25 they still are. I feel like it probably blew a lot of shorts out into the close, but lower the better. As long as things are holding on, I'm interested. The only time I'm going to switch to short buys is if two things happen. One is a parabolic move, or two, look left, draw lines across key levels. And if it starts to stay heavy each time it attempts those spots, then I'm interested in starting into the position. But I'm not interested in getting aggressive and sizing until we start to really kind of change the trend and get a feel for how it reacts after its first pullback day, just like RAD. And RAD, just to kind of refresh your memory, it's been a great trader too recently, but you can see how high it just keeps on going and going and going and going, and then don't underestimate how far it can unwind. And I think we're going to have a similar situation with SPCE. Maybe not as aggressive both ways, but a condensed miniature version of that. Work, same thing I talked about a little bit earlier, just as far as the wicks and the goal and kind of what I'm looking for on these types of trades. Ideally, we get some more of these wicks like this and maybe a breakout towards 30 in the short term. So far it's been working. I really minimized this potential here. I've been on it with the idea and thought every single day. I've gotten there small, but I just have not held it as well as maybe something like SPCE when I did. So the goal would be dips and potential breakout. For something like this, I probably would want to see 27.50s holding, 27.40, 27.50, over and under that level. If it starts to peak out, then I'd probably wait until it consolidates and starts to build a new base up a little bit higher, kind of like this, this type of formation. But I want to see this type of action at each stage, as it goes higher and higher, and that's exactly what we talked about, SPCE, just to refresh your memory. And again, I would suggest to go back and, go back through these prior videos, but you can see the wicks over here, you can see the wicks over here we talked about, and over here I was hopeful for basically dips towards 18 in order to get long, and same thing the last couple days. The good part about SPCE was each day they kind of let it fade off into the close, and as I said in the room, I like when that happens because it gives shorts the ability or the feeling that all right, it's finally about to pull back, and they go home, they feel a little bit better, and it just ends up ripping. So that's that. What else did I? SUMR was a pretty wild one. SUMR took off from the 30-cent range on Friday, and took off like crazy, started to consolidate, started to rip up again. I got involved in this area versus, once it washed out a few times, I started to use this 77 kind of area as my guide, 75s basically. I traded it into the one and into this push. But for right now, Lower the better. Not thinking a move tomorrow. I'm thinking maybe consolidation day, but then come back Wednesday. And if we have a nice little breakout there, I'm definitely interested because it's going to probably bring in some buy-ins, T+2. If they drop a PR, possibility. Otherwise, be cautious. It was just 30 cents, and this is when you get in trouble. Moving on, and again, I've broken up scan into different sections. So the prior three were the main watches. Not necessarily anything that I'm crazy excited about. Like I said, it's been different the last few mornings where I'm not coming ready to go. I'm only watching these. It's let's wait, let's see what happens, and we'll go from there. And it's been fine. There's been plenty of opportunities, but it's just been a little bit different. MYGN, this has been a kind of a bigger picture idea. Higher the better, and I'm hopeful that it just this time's different. The last couple times it's come down to this level, they always buy it back up, support it, and bring it right back up. This time it's finding some sellers. So I'd like to continue to fade that until 18, maybe a little bit lower, as long as the morning moves get met with sellers. So it's not a crazy sizable trade, because the only days that I would use more size is if there's liquidity, volume, things like that. So higher the better. I like the candles, like what you saw right here, where it comes back up, sits back down. If you think about it, it's opposite what I've been talking about on SPCE work, and even the lower float ones like NRBO or CUO and names like that. Instead of dipping down and then the buyer comes back up and you get that wick on the candle, these ones, they're going up, seller slams it back down, and you get that wick on the candle going the other way. So that's exactly what's showing up here. This is kind of proving to me or suggesting to me that there's selling pressure. So that's the thought process there. BTAI, this was a wild one, pre-market, and I reacted to it. I did fairly well on it. Not a size trade. Yeah, if I did what I did with size, it would have been an amazing day. But I'm not gonna get super aggressive on this thing, especially when we've seen what can happen on some of these biotechs. So I like the opportunity here. I think that it could be a potential failed follow through, but at the same time, you can't ignore the fact that we had a full day of consolidation over this 35 level and kind of took a turn up. So I think the key levels are going to be maybe the 39 and probably 34.50s, 34s, and just kind of see which way it breaks out of that channel. And depending on what it does, then we make a trade from there. But this might just take a few days to kind of set up. We've seen stocks like this that come out swinging, huge move, and then they just fade off. Considering the fact that it's come up from 4 and now it's almost 40. And it's only been, that's November. That's a pretty crazy move. But they had a 150 target, and, sometimes people think about that, look at that, get excited. They buy, they hold, they wait for 150. Hey, it works for most of the things right now. But I'm not sure that we're going to have a trade just because of the volume. So we'll see what happens. We'll see if there's a trend that forms, and if there is, I'd love to trade it. But again, you just got to realize what you can do with the liquidity at hand right here. It's not always something that you can size into. There are days that you can size, there are days that you can't. And also, not every trade is a size trade. So this is something that maybe will produce a $3 to $5 trade for you, and it could be working while you're working on other names. So something like this, sometimes I like to try to get on the right side of it. Doesn't need to be size. Let it work. Let it do its thing. And set your stops if you need to, if you can't watch it, and focus on other names that are a little bit more active. SPWR, looking just for failed follow through. Pretty ugly unwind. This one's no stranger to these unwinds, so higher the better, potential unwind. Higher the better, potential unwind. So in a situation like this, I'd be looking for those reverse wicks that we just talked about. So morning move, 850s, fail, join the sell. Same thing with QTT. QTT's had a steady run. At this point, I'd just be looking to join fades. And this could easily snap back and start breaking out tomorrow. And that's fine. all I'm looking to do, especially QTT and SPWR, I think the key or the secret is 9:45, 10 a.m. plus. Is it over VWAP? Use that as your stop or your kind of your risk. Or if it's under and you're looking to join the trend down, size based off of the VWAP. And that's essentially what I do to try to get into some of these names. And as they start to unwind or break out, depending on how aggressive they are, if they start to have a little bit of a potential outlier move, then I'll start to scale in, because those are the days that you want to use a little bit more risk. Continuation trades, PAVM, great breakout. I've been watching this one a lot, and I just I should have paid more attention, because I would have been all over this. These have been working. These stocks that come from 50 cents, 80 cents, 90 cents, and then all of a sudden they consolidate, they break out that prior high. They've been nice, and you can see the same wicks we talk about. So this should have been a focus for me, but it slipped off my radar. So I'm still interested. A week opens, 240 starts the base, 230 might take a couple days, and then rip through 250, and I'd be interested for sure. And then you got to obviously hope that it keeps on going 4, 5, 6, and then you have a big trade like we did on PTI. PTI, if you guys forget what that was. Look, at some point, if you miss the breakout, you just hope that they keep on going, because the higher they go, the better opportunity you're going to have in the future. CC, this one has been pretty choppy, pretty difficult name to trade. Every breakout gets sold, every breakdown gets bought. It's been in a channel for quite some time, but this might be finally the day that it breaks out of that channel. And if so, we could have a nice big breakout, maybe another buck, 2, maybe 3, or we gap up, we run right into the resistance here on the left, and we fade it back. So I'll be prepared for both. But the volume has me interested, way above normal, and we have to go back to August 2019 to see that volume. So it might be one of those transitional type days, just like work with the 60 million volume. IMGN, week open breakout is always the ideal trade here. Nice move here, great setup. But again, I'm not biased. I would like to join the trend for a breakout, but look, if it pops tomorrow morning and it fails and it starts to pull back, we could unwind this entire trade. All right, the last 3 are lower volume trades. And so, just like NRBO, if you guys saw that last week, this was a recent reverse split. It's what was working. And, this is nothing that I alert in the room. It's just too low volume. There are newsletters that will that have no shame that will alert these things and tell you bye, but that's just not for me. So, there was a little buyer there soaking it up. And so I just joined that in the IRA as a potential swing. And so it started to go up, and it was ripping to 15, almost 16. And like I said, I thought I was a champion for selling the majority of it at 15. It pulled back to 12 or 13. I was like, sweet, idiots chasing at 15, and then they get the last laugh. Goes all the way up to $30. So very thin float. Not something that I typically would trade with. Like as a momentum trade or anything like that, unless it was, many millions of volume. But nice breakout, and just the point is that CUO is kind of setting up the same way. So again, it's a super low float type name, but you can see that they potentially came in this day, and since that point, they've kind of supported it. You can see the accumulation on the daily. So we're coming up over some key levels, and let's see. You see what happens. And again, it's not a breakout type of trade. And for me anyway, I've accumulated a few. But for me, I want to see it pull back and prove that it's going to hold higher. Pull back, prove that it's going to hold higher. And if that keeps on happening, that forms the same trend that we've talked about on SPCE work and things like that. So again, MICR was similar. This is another thinner name. But the point here, the reason why I'm showing you these things is it's a good example of what I'm looking for, right? Especially even on high volume, SPCE work, right? Comes back, somebody buys it. Comes back, somebody buys it. And overall, it keeps on getting a little bit higher, pulls back, somebody buys it up. Pulls back, somebody buys it up. So there is interest there. And so I like to join that interest and then potentially be able to scale faster because I have a better average. And it's the same conversation that we had CBLI when there was a trend, there was a buyer in the tape, and the same conversation we had on CPHI. We put this, I put it on Sunday Scan 2 weeks ago, and then that Monday it was nuts. I mean, you have to watch in this market. It's working so well. When somebody keeps on saving it, it turns into nice momentum. So that's what I'm looking for. It should have pulled back, but somebody saved it. Should have pulled back, but somebody saved it. And so that's all I've been looking for on charts. So you know what? If you guys ever see charts like that too, fire them up. Fire them off on the comments tonight if you'd like. That's the kind of stuff that I like to see. I always like to look for, it doesn't matter if it's high volume or low volume. All I want to see is trend. And most of these things are trash, but you know what? If it develops a trend, then it's always a possibility. And then VVNT, I did trade this the last time it went nuts. Newsletter came in and kind of screwed it up, but they're coming back, and so that one's another one that's interesting. But again, those last three are low volume, so it's not my typical types of trades, but my focus is going to be the momentum, the main watches, higher the volume, but in my other accounts, IRAs, things like that, I always look for the candles that are getting soaked up, and that's the point here. So anyway, that's the game plan for tomorrow, which is Tuesday, short week. I guess I should probably go check out YouTube and get somebody for the free month of chat. So I'll go through here, find somebody. Let's see. I mean, we can take it easy, make it easy, and do Jesse James 287. And you can just email me. And so it's been another month. So this is a free month of chat, and now I'll ship everything out, and then we restart again for another month. I'm just not going to go to the post office every week, but once a month I'll go. And so anyway, we'll see you in chat. Jesse James, just email me, and I will send you my email. If you guys have any questions, you know the drill. Leave a comment below. I always like your feedback. I try to get back to everybody most of the time. But I don't always know what you guys don't know. So if things don't make sense, tell me that. If things make sense, if things are aha moments, that's what I want to hear, because that's where I want to zone in and focus. If some of these things that I say don't make a lot of sense, go check out our beginners series. We did, I think it's an 8-part series. It's very, very thorough, and it's going to bring you up to speed faster than most things, and it's free. It's right on the YouTube channel, and we did that a few years ago. I mean, it's all the same. It's not outdated or too old or anything like that. Yes, we always add in new. I'm always developing. So are other traders, right? So, I use VWAP now quite a bit more often. We covered that in all the videos and things like that more recently, right? I talked about it today on this video. I talked about it in my video lessons. But everything still stands in those video lessons. So make sure you guys do check that out. And again, any questions, leave a comment, give a thumbs up, and we'll see you in the room tomorrow.